Hey, what's up guys? This is Kenneth and I'm back with another video. This video will be Market Structure 2.0. Okay, so if you haven't watched Market Structure 1.0, you shouldn't even be on this video. You should just stop this right now, go back to Market Structure 1.0 so that you can get up to speed with what's happening. Okay, so in Market Structure 2.0, we are just basically identifying how we are staying in structure so you don't get misleaded and misguided by what the market's doing, okay? Because there is a certain kind of flow, and as long as you are staying with that flow, you are in the right direction. Okay, so if we move on, just want to refresh quickly from market structure 1.0. We basically wait for a break and then a push, and then we'll buy on the higher low, or in a downtrend we'll wait for a break of that and then push down and we'll sell on the lower high. Okay, with market structure 2.0 we are basically going to look at how we can keep our orders on the chart. So basically, if you entered long and then you see the market do something crazy, you don't have to get scared and exit your exit your trade, because I mean, what happens is the market will respect structure in a certain trend, and what that looks like is this. So in an uptrend, right, there are different kinds of structure, okay, but what you need to know is we'll have our normal higher highs, higher low. The market doesn't always move in what you learned in market structure 1.0. What tends to happen is we will find that the market will create lower highs inside of an uptrend, okay? But the secret to the source here is that we just keep on creating higher lows. Why? Because we know that when the market breaks a higher low, okay, that means that structure is broken for the uptrend, okay? If it doesn't, it's not broken. So we only wait for the higher low to be broken and then structure is broken. But if not, we just keep on creating higher lows and higher lows, even though we're making lower high points. As long as we are making higher lows, our uptrend structure is being maintained. Okay, here's another example. Higher lows over there, and then the market basically finding a higher high and then sitting at a resistance, but continuously making higher low points. Okay, if we look at the next example, we can see that the market basically made a higher high, we created a higher low, and the market literally sat on that higher low point. It did not break the higher low, we just continued to make lows, and we sat on one level as a support, even though we were creating lower high points. Okay, market then pushes up, creates a higher high and a higher low. So as long as the higher lows are being maintained, the uptrend is still, how can I say, we are still in an uptrend structure. Okay, likewise with the downtrend, if we know that when a lower high is broken in a downtrend, once the lower high is broken, that means structure is broken. So as long as the market is basically maintaining lower high points, that means that the downward structure is still being maintained. So we'll create lower lows, and even though we just sit on a support level and just create lows, that means that the structure is still being maintained. So then we'll go down to a lower low and then create a lower high. Our downward structure is still being maintained here. Likewise in this section here. So if you see the market coming down, we create lower highs and then we stuck on a level of resistance, right? And then the market creates higher low points. It does not mean that the trend has changed. Only once a higher low has been broken does the trend change. But in this case, it doesn't, and we sit on a level of resistance. Therefore, the market pushing down to a lower low and creating another lower high point. Okay, so how does this look on the charts? We can basically, I found a nice example over here. So we'll basically have our break over there and then our first higher low point over there. Okay, this was just a minor retrace, and then we had a push up, creating our higher high, we had a higher low over here. Now if you notice, okay, after our higher high over here, okay, we then had a lower high over there. We had a lower high, and then we had another lower high over here. Okay, so you can see the market is basically coming down, but we are still maintaining that uptrend structure. So we are still maintaining that uptrend structure over there. Okay, so we are still making higher low points. Whoops, what did I do now? Let me remove that. Wow, what is going on now? Okay, so we are still creating our higher low points over here. Higher low, and so forth. And as you can see, after that, we then break out and make, why is this thing doing this? We then make our next higher high point following, sorry, wrong one, following a higher low right here in this area. So you can see how the uptrend structure is being maintained. If you want to draw a trend line on there, well, in this case, it's not that necessary as it doesn't line up, but we do have our resistance over there and just continuing with our uptrend structure. In here, you can see as well, we have this nice strong upward push, and we basically have a small trend going down to our next higher low point. Okay, how we identify higher low points is found in Fibonacci. Okay, how to draw Fibonacci. You will learn that later on in the course, but this is it for your structure 2.0. You guys can just basically get down with the rules and just know what this is about. You can draw it out on your chart as well, just to help your eye see these moves. That was actually one long push all the way up over there. Okay,